Yeah, welcome to the breakfast show. Happy Tuesday, everybody. It's Tuesday, which means we're on the breakfast show. Today we have quite a wonderful lineup. I keep getting the date wrong. It's not the 2nd of September, it's the 3rd of September. But that messed up. Anyway, we have quite a wonderful lineup of people joining us today to talk about real world application of crypto. No more circle jerk. We'll hopefully get them on soon. Mati will be joining us in a minute. So will Anton, Golub, Robert, Weasley. Good lads, excellent lads. But we still haven't had hey, Robert is on the show. Robert is a bit. Hey, Robert, beautiful skies behind you. How are you?
I'm doing well. I'm at a castle in Umbria right now for
In where?
in Umbria in Italy.
Oh wow.
So I'm
Can
just
you take us to the throne, or you can take the call from the throne, like sit on a throne and get the video on,
yeah.
and you'll just be.
Can you hear me okay from here?
Yeah, your audio is great. Your video is great.
All right.
Your
Well,
view is great. Anton as well.
I'm just gonna set up here then.
GM, Anton, how are you?
Good morning, my friend. How are you?
I'm good. I'm good. We have Robert as well. He's joining us from a castle in Italy. So we have a nice mix of locations here. This is the breakfast show. So everyone here is having a coffee, a breakfast, whatever. We're in the European time zone, the Middle Eastern time zones. We can still, the burgers are sleeping, so they can't dump on us while we're on the show. I don't know if you guys have seen it, but the last couple of weeks has been like Asia pumps and America dumps. So that's kind of what we're trying to avoid by having the show at this time.
I like it. It works perfect for me.
Let me just make sure to see where Mati's at, and then we'll kick off the show. Let's see where Mati is at. Mati is in California, so it's midnight over there. And last week, actually, Mati joined us from he got off a mountain. He went to mountains with his family, and he couldn't get off in time, and he ended up making it back just in time for the show. But hopefully today it's a lot easier for him to join. But let's see where the big man is. He's online, so he should be joining us soon. But I don't know if we have to wait for him for the intros. Welcome to the breakfast show. This is where we highlight innovation, Web3 technology around the world, and with the special purpose of, I'll tell you guys, I don't know if you know the name Yalla Bitcoin. I don't know if the name Yalla, if the word Yalla has any resonance for you, but Yalla is a sort of a rallying cry in the Middle East. I think it's originally Arabic, but it's used a lot in Hebrew as well to, like, spur people on, like, Yalla, like move, make a move. And one of the reasons, I chose this name is because I think that, Web3 and Bitcoin and crypto have a potential of, spurring us into action through collaboration and innovation, and doing so will bring peace to the world peace. Like that's sort of like a meme right now in the Bitcoin community, the puppet NFT that I hold, like world peace. But I really do believe in that, and I think it starts with us. So that's where the Yalla Bitcoin comes from. Good morning, Mighty. How are you? How's California doing?
Yeah, good morning. California is holding up okay. Should hold up just fine until at least November. But after that, all bets are off.
All bets are off. Well, thank you guys for joining us. We'll go into some quick intros. Anton, you were on the show last week, but unfortunately, I mean, you settled into your new place. How's your new place? Tell us a little bit about yourself. Go a little bit of background. How's your new place? I can see the grand piano that you've got behind you.
Yeah, so
we'll move on to Robert, and we will start the show.
Yeah, so thanks, Dudu. A pleasure to be back. And just in the preparation for this, I wanted to say, it's a crypto bull run where people are doing live streams from a castle, which unfortunately is not me, but it's you, Robert. So very envious, looking great, nature. Having a blast. So yeah, I mean, nice to see you all again. looking forward to some awesome discussions today. And crypto bull market or not, it's always good to be surrounded by friends and people I know well and had a good experience now for many years. So, looking forward. Let's rock.
Epic. Robert, why don't you
All
want to give us a
right.
little bit of...
First real human.
We have some humans.
Good morning. Good morning.
We're at 4 humans, so we have as much humans as panelists, and we're only 3 minutes in. So this is beating record.
So far, more bots than humans, though. We have 2 bots, 1 human.
You don't know if they're bots. How do you know if they're bots? Don't misgender them.
Put the comments on. Let the people decide. Put the comments up. Let's see. Ndog says hello, and here says exciting times ahead. All think that everybody thinks they're human. Raise your hand.
Yeah.
Yeah. Okay.
But I mean, I started reading the book June yesterday. I've just got into it, but it's about like a futuristic world where you just don't know like who's human and who's a bot. Like those lines are going to be blurred soon, and you're going to be cast into the woke dungeon for misspecifying someone. If you call someone a bot and they want to be identified as human, that's going to cost you your career. So just be careful there, Marty. So Robert, welcome to the show.
I'm sorry I misspecied you.
All right. Well, I mean, I think we should run a poll in terms of what species I am. This one, I'll let you guys guess that. Great. Thanks for inviting me on the show. I am calling you from a castle in Umbria in Italy. There's a conference here called the Tetris Web3 conference. And so I think it's pretty in tune with the discussion today. So a bunch of real world problems in the travel sector that we're trying to solve. So speaking of real world assets and real world problems, the travel industry is typically quite far behind in terms of technological innovation. But it's nice to see conferences like this, pop up trying to do something different there. So there's lots of cool people, and happy to be on the show.
Maybe I want to kind of dive into that a little bit more. Like what are you? Is this a Web3 conference specifically around Web3 and travel? Like, what kind of problems are you seeing that can be solved with this kind of blockchain technology?
Well, I mean, in the travel sector, you can kind of look at some of these booking platforms run by companies like Amadeus and others, and you just see how old the technology. I mean, it might as well be like terminal interfaces. It just like kind of, okay, the 3-letter code for the airport, and it just turns out all this like black screens with green text and stuff. And so there's a lot of opportunities there to better connect and interoperate travel systems, doing things with bookings and having those bookings be sort of tokenized, or trips being tokenized and tradable and things like that, and reselling stuff. I mean, what we're doing in the travel sector is we're connecting rewards programs. And so I think everyone here has been a traveler and collected airline miles and things like that. And a lot of us can't make really good use of those miles. They just sort of like sit in the account and expire occasionally. And so what we're doing in the travel sector is we're connecting rewards programs. So that if you've been given rewards with an airline, you can go spend those on a fashion brand in Milan, and vice versa. And so at the core of that is, of course, a blockchain protocol called the Me protocol. We can talk about later if we have a chance, but this is the kind of innovation that we're trying to bring to the travel sector. That's kind of like, some people in the travel sector are very adept at innovation, and then there's a lot of centralization with large companies there. So it's harder to push through some of the bigger deals. But yeah,
that's
happy
really
to.
cool. I mean, I had an idea while you were speaking, like liquid restaking, but with your booking. So I can book tokenize my booking, but then I can stake it to get some rewards for until the event. I don't know exactly how that will happen. It seemed kind of silly, but it's something that the leverage junkies seem to have liked. So I want to kind of
What happens if you get liquidated? You lose your flight, or what? Like, I got liquidated on the way to the airport. I guess the trip's off.
On the airport. So, before we dive into the meat of, Robert kind of prefaced a little bit of the conversation, but I want to, Matti, I want to get from a little vibe check from you. How are we doing? What you're feeling? We're officially 6 months into the chop. The chop started on March 4. March 4 was the last serious up candle, and we're now almost at September 4th. So we're nearly 6 months into sideways price action. What's your feelings? Are you bored? Are you building? Are you stacking? Or what's the situation right now?
Yeah, a lot less activity, unfortunately, in the market analysis, perspective is not as many journalists coming, and saying, hey, why is Bitcoin gone up or down? It's just not as interesting anymore. Not as much, analysis going out on price movements and stuff like that. So for me, yeah, more time to focus on what matters, building quantum expeditions, Cora Finance, and if you've seen the new QE.finance website, that's just the first iteration. So a lot of work went into that, and a lot more to come. So yeah, just building and waiting for that breakout above 73, 74K, and then we can start making new headlines, and things become interesting again.
Well, Robert, Anton, how are you guys coping with the endless chop, the wavy, boring, up and down that has no direction and no purpose?
Maybe I can kick it off. So first to say that the crypto markets are not for the weak. So if you thought that this is going to be easy, it's never easy, and each cycle has its own ways. And yeah, I mean, the markets are just not moving anywhere. You can see it. And maybe the question will be why are they not moving and what's missing? And, myself coming from a market making exchange background, the answer is liquidity is not coming in. Not the liquidity but want. We had quite a lot of capital coming in through the spot Bitcoin ETFs, and that has pushed, price literally from I think 40K to 70K, 69K at the peak. So, but when you kind of compare it to the previous cycle, the way it sourced liquidity into the crypto industry and the crypto markets was actually through all of these platforms that are now bankrupt, that have the names BlockFi, Voyager, Celsius, FTX, and so on. So they were sourcing a lot of capital from retail, but also professional investors, promising them yield, quite high yield, right? And then that was being pushed to the hedge funds, to the prop shops, to the market makers, who are then pushing this liquidity into the markets. And that's why you had kind of everything skyrocketing at one point. And now if you kind of compare it, you realize all of these players are gone. So BlockFi bankrupt, Voyager bankrupt, Celsius bankrupt, FTX bankrupt. So the same channels of liquidity just are not there anymore. And now the question is where else could the liquidity come from? And some people usually then tell me, well, meme coins, that's where liquidity is kind of being pushed in or generated. But then when you take a closer look, you just see kind of it's going in circle, right? This playground at Solana was going in circles for for whole summer actually, right? And now they have another, shiny toy, which is Tron, and now on Ethereum they will do something. But my kind of point here is the reason why we have the chop is because there is no new liquidity coming in. And that's basically it. And once it starts coming in, either to the ETFs or through something else, you will have the market skyrocketing. I think, not giving a financial advice, obviously, but I think end of the year is going to be spectacular. So I see the chop as something very, very positive if you're looking to build up a position over, the coming time period.
Yeah, just pick.
Yeah.
Go ahead,
for it.
No, I was just going to say, I mean, that was a really good comments from Anton. We're riding the chop, of course, from our side. We're actually releasing a token, probably early October, end of September, our own token. And it's, of course, when you're launching a token, you're always thinking, okay, what's the right time to do that? What part of the bull market are you going to do, or do you have a bear market play? And everyone sort of has their opinions on when to launch. But for us, it's a long-term play for us as well. the token. It's not just a pump and dump type approach like a meme coin or whatever. And so we're really writing the fundamentals of our business and our ecosystem through that. And so a lot of our effort is on trying to reach out to investors and people who would like to acquire and hold our token, to sort of ride our business forward. And in that sense, it doesn't matter exactly when we're entering the market, whether it's in September, late September, or in November. I remember talking to people in May and they said, okay, definitely late September. That's exactly the moment you want to do it. Or in April, I was like, oh my God, the market's going to move back. And really no one has an idea about that. I think the chop is nice. It's good to have volatility in the system at the moment. Maybe the elections will give us a push in one way or another. But I just see like an incremental sort of rise in the penetration of crypto within normal retail investors and also like large institutional investors. So when you're talking with like brokers and market makers and people who are dealing with institutional investors, you just see their book of business just growing, and sometimes growing quite a lot. People talking with high net worth individuals, they're still doing a lot of, who have no idea about crypto. They're still doing a lot of like teaching and acclimating to the system. And I just see that progressively building over time. Yeah, so that's
interesting.
That's my a bit longer term view of it.
No, it's interesting that you bring up the token launch, because I think one of the casualties of the chop has been TGEs, which have been delayed across the board. And it's very refreshing to hear someone that's saying, okay, no, we're backing.
I've delayed 2 already.
So maybe you guys speak to that, because there's kind of a dynamic here with TGE. If you launch your TGE in a bull market, you'll be able to raise probably a bit more money, but the valuation will be higher, which means, a lot of the TGEs that happen February, March, April, whatever, they significantly the tokens are trading significantly lower than the TGE price. On the other hand, if you launch in a bear market, it might be harder to raise that initial capital, but you're starting off at a much healthier valuation, and there's only up from there. So you have those kind of two dynamics. So maybe you guys can speak to kind of the thought process behind deciding whether to launch the token in the bull, at the heart of the bull, let's take advantage, money's flowing in from everywhere, or launching it in more quiet times where valuations are more sober, let's just say, and then watching the market elevate your
the issue with that is, it's a good question, but I've seen several projects already that took the latter approach, and they're like, well, let's launch it whenever we're ready to launch it, and okay, the market's not doing great, but let's do it anyways. And then what ends up happening some of the time, so obviously this is anecdotal, like I haven't analyzed the entire market or something, but from my experience, they don't tend to catch the lift, right? So when the market does turn around and tokens start going up, the investors just don't pick up that coin because they've never seen it do a 10x before. They don't necessarily believe that it can or will. So there's that. And I mean, from my experience and perspective, it's always better to be launching when people are out there buying. You're going to raise more money, most likely, and you'll do it at a higher valuation, which is great. And I don't really see much of a downside to it. If the bear market comes and the token price, it holds up, great. If it doesn't hold up, I mean, that's the market for you, right? So best thing you can do is to implement sound tokenomics to ensure, continuous demand for the token, and the best you can do, really.
Yeah, I think there's also the consideration of what do you do after the TGE as well. So that's something that we're working really hard on at the moment. So it's not just kind of building up to the TGE and you're doing your public sales and then like the listings and then trying to capture that current community or the current people that are engaged. but then like, how do you do it afterwards? So what's your progression as a project or as a token or as a protocol over the course of time? And then how do you engage the community to understand that? So you can see people just have like these concepts of staking in order to, the value of the token is going to be going up. But do you have a plan around like how to do that and how to communicate that with the token holders at that point? And then like, what do you have really in your pipeline that is going to be exciting from like a speculative or investor perspective? So is your project building momentum? Is it continuously building momentum over time? And so if you do launch and it's not really the optimal point in the bull market, are you still able to, when you get to that optimal point of the bull market, capture the attention of the community? And I think as you move forward, the crypto markets are maturing. So people have a much more mature and sophisticated viewpoint on projects and tokens and things like that. It's not just what does your tokenomics look like or what's the community size in T1 or T2. It's really like they're analyzing it more like you would a traditional equity in a public market. And I think that's going to progress, especially as we see more institutional investors coming in on the ETF side and et cetera. They're going to be wanting to look and understand a little bit more about the assets in their portfolio. And so I think that works well when you have a project that's grounded also in the economy outside of crypto itself, that you can just continuously point to project. I mean, we're closing brands, we're closing banks, we're closing travel companies, hopefully more after this conference. And so this is something you can constantly communicate to the community. If it's just like, okay, our yield went from like 4 to 5, and aren't you guys excited about staking? That's not really great news to communicate, and I can see people losing interest very quickly.
Yeah, Anton, what do you think about the TGE dilemma? To delay or not, and wait for a bull market, or is it best to launch?
So I think, I think Robert said it best actually, that any TGE needs to be done or decided within the context of a broader strategy. Like, what are you trying to achieve there? Because TGE is just a tool in the end, but a very important tool, because when you announce a token, when you communicate it, when maybe even raise some funds through it, it's an extremely, extremely important milestone. So, in that context, I would say. But I also wanted to flag is that, from my experience, token launches have also a very important psychological component, if I can call it like that. And I'll give you like one example that it's very psychological, but also one that exchanges penalize a lot, is does the price of your token end up below the listing price? And everybody who has done a lot of TGEs will tell you that usually if the token price fairly quickly or over kind of midterm goes below the listing price, this is usually something that wipes out the project. Because psychologically for a lot of people, it's a big burden. Obviously, on an investment side, it's a big burden as well, because if you bought at the TGE, now it's below, like it's a failed investment, if you want to call it like that. But additionally, exchanges, most of them, when you sign the listing agreement, they will penalize you if the price goes below the listing price. So usually in this horrible TGE or token listing contracts, you will have actually, they call it a security deposit or a listing deposit. And they will say, you need to put there $100,000. And if your price of your token goes below the listing price, that security deposit is ours, because we don't want that to happen on our exchange. So something very psychological, but something also that has a big monetary impact on your project is actually, does the price go below the listing price? And so, but, I think also like Matti, you said one thing is, can your token capture the pump? Let's say like that, very figuratively. And what I have seen, in a couple of cycles is like when crypto goes up, your token goes up, everything goes up. I just don't know like how people really make those decisions, what goes up or doesn't go up. But like I think you remember it in the previous cycle, it was this like period of mid 2021 or early 2021 when things went up. I think that nobody was discriminating tokens, just whatever you look at went up 5x, 10x, 20x, or 2x, depending on liquidity, and it just all shoot up. Now I have learned that no market cycle is the same, so I don't know if that's a good advice now or not, but this is what the history has shown.
Yeah, look, Anton, you opened my eyes in a big way, my friend, with the whole BlockFi speech earlier, because I've never thought of all these Ponzi's as like, the doorway of liquidity into the market. Like that's how money got into the what I call the long tail of altcoin, through the the staking and the yield for the centralized reward of BlockFi, of Celsius, of FTX. And without that, and and also I actually, I've actually shared a graph a while ago. I'll look it up. I'll put it up in a minute. But it shows the Bitcoin price plotted against the VC funds that have been raised every quarter. And you see that the Bitcoin price is obviously close to where it was in 2021, 2022. But the VC funding is maybe a third of what it was in those times. So you have less liquidity coming in from BlockFi, Celsius. You have less liquidity coming in from the VCs, and you have more projects competing for those same liquidity. And you have meme coins that are taking away the buyers that would otherwise buy these utility token projects. So those four things together make a quite a challenging landscape at the moment. But definitely agree with Robert that if you have a sort of a game plan for after the TGE to keep pushing out and rolling out the kind of announcements that make the army go bullish and start bull posting, then you're in the clear. If your TGE is sort of like the end of the journey, then you might be in a bit of trouble. So just make sure that you have actual utility in play. I want to move on to the next topic, and this is, we'll start off with the Vitalik tweet. I'll read it out to you, and then I'll get you guys feedback on, how do we move away from that and how do we fix this. And this was a big tweet, in my opinion. He tweeted out last week, and this is because, a lot of people have been saying that DeFi is sort of a circle jerk, sort of just a leverage game for insiders to leverage ETH. And,
who said that?
Pardon?
Who might have said
were
that?
saying
No,
that.
I've never heard that before.
But yeah, you have Vitalik Buterin, the actual creator of Ethereum, saying the same. Right? We said when the yield comes from borrowers, trading fees, it worries him the way DeFi is done today, right? Because it feels like an Ouroboros. An Ouroboros is a snake that's eating its own tail, right? So it's like a fancy Victorian way of saying circle jerk, right? And the value of crypto tokens is that you can use them to earn yield, which is paid for by people trading crypto tokens. So he's talking about the DeFi system as it is today, where a lot of synthetic assets and wrapped assets and different farms and yields and all these mechanisms, but the underlying utility, the value isn't coming from something real. It's not coming from, no one's going to DeFi lending money in order to start a business or to build a house, and then using that revenue generated, plugging it back into DeFi, and that is what the lender gets paid out. Rather, it's mechanisms of, the yield is either coming from someone else paying a higher yield, and then the platform takes a cut and you take a cut, or the yield comes from, I've got 100 million tokens in my supply, and in the tokenomic plan, I put 10 million tokens towards farming, towards liquidity mining, and then I'll give you free tokens, but that runs out eventually. So my question to you, gentlemen, is how do we make it more sustainable? How do we create a world where in 5 years' time, Vitalik can make a post that says, I'm so proud of DeFi. It's my crowning achievement for being able to create the system, and not what he looks like now, which is, a sad, mad scientist that looks at the monster that he's created and be like, nah, this isn't it.
Had to bring Dr. Frankenstein in there, didn't you? I believe
I didn't say Frankenstein because it's not quite that destructive. It's more like if Frankenstein was a degenerate gambler. That kind of like, that's
I believe at the end of the tweet, I don't know if that was the same tweet or whatever, but I remember clearly Vitalik saying recently, if you don't know where the yield is coming from, it's coming from you. So yeah, be certain that when you are involved in anything DeFi related, that you do kind of understand how the yield is being generated and how you're making the money that you're making. I think it's one of the primary reasons why I haven't done very much staking at all. And even further is one of the reasons that inspired me to build the Cora app, where we can really get down to it and help people understand and explain it to people in a way that they can feel free and comfortable using these type of DeFi tools, and understand that they're not going to get rugged or they're not being taken for a ride or whatnot. So the question is that because the blockchain economy is being built from scratch and being bootstrapped in the cloud, for lack of a better terminology, we're going to have that feeling of the Ouroboros, as he described it, or I've heard it described as like kind of shoveling shit from one corner to the other. Especially in these DeFi products, it's more like leveraging shit, and then you have just more and more shit that eventually people are going to get liquidated, or things are going to blow up. I believe that the solution to all of that is to have more real world products, more real world assets, more tokenization of those type of things, and then you get the economy that you're talking about, where there's real value being created, there's a building being built, or there's a person buying a house or whatnot. That all goes onto the blockchain, and then we'll have these protocols that are sitting there ready and waiting to financialize those transactions and turn them into valid a blockchain economy, so to speak. And I do feel like we're making a headway from regulatory standpoint, at least in the European Union, possibly in Asia, and then obviously if we get a Trump victory, fire Gary Gensler, and then Circle and the folks at Goldman Sachs can have their way and do that properly in the U.S. economy as well. So I believe that there are some sort of regulatory roadblocks to making that dream happen. But I believe that it will happen eventually, with or without any government's blessing, just by nature of the fact that that these transactions and this technology cannot really be censored, and therefore people will use it in that way at some point in time in the future. So when, if, how, I think we're going to watch it all unfold over the next 5 to 10 years. But I'm quite certain that within that time frame, we can completely replace all of traditional finance with something much better.
Picking up on Maddie's points there, all very good. I think we also have to look at where is the value being generated, and like how much value is that. So a lot of this, like staking on top of staking and loaning and things like that, there's obviously value generated there, and I see that it's necessary to sort of continue to innovate on this side. But then you also have to draw value from other areas. So Maddie mentioned real world assets, real world problems, taking value and extracting some economy from real world problems. So in the conference here, this setup, we're talking about generating value from making travel more efficient, making travel more attractive, and etc. Or in our business, it's about making rewards more valuable. There's $180 billion of rewards out there, and about $100 billion worth is just like sitting underutilized. So projects like that are extracting value from the larger economy are necessary for these like very sort of technical yield-based approaches to really function. Because in the end, otherwise you are sort of circling your tail. You're taking money from one person, giving it to another just to give it right back. And I don't think there's a huge amount of value driven from that, unless it's then coupled with some sort of like solving some real world use case.
Anton, what about, or like, you know, we haven't spoken about real world assets maybe in 6 months, maybe more. Lots has changed since then. Anton and I used to go on and talk about real world assets a lot of time when I was at INX. And, you know, since then, I think nothing, the biggest change is that there hasn't been so much change. And what I mean by that is just like there isn't the kind of rush, even though it makes sense for you know, companies, for stocks, for bonds, for different assets to be tokenized. And there hasn't been this rush for, you know, equity tokenization. On-chain treasuries, you know, have grown in that 6-month interim. We could, you know, BlackRock have gotten their foot in the. BlackRock has joined the chat with the Biddle fund, so that's grown to a couple $100 million, as one does, just a drop in the bucket for Larry Fink. But you know, in all the other use cases, real estate, for example, that also has, I haven't seen, you know, I haven't been as deeply enmeshed in the real world asset sector in the last couple months, but I haven't seen, like, it's still stagnant. Like, in terms
But take a look at DeepIn, for example, because DeepIn is making moves lately, and there's been a lot.
DeepIn is a bit of, like, a lot of people want to try and conflate it. DeepIn, for those of you who don't know, decentralized physical infrastructure network. So that may be like a decentralized, you know, GPU for doing AI training, or for decentralized different mapping systems that let you map the world and get paid, or run different nodes. I don't consider that as real world asset tokenization. I think that's a different, you know, it does have, I think it is in this real world bucket, you know, the same way, like, you know, is.
Well, why not? I mean, they're collecting data, they're monetizing the data, they're using crypto protocols in order to create a marketplace for that data. Why is that not real world? That's just as real world as Google or Uber.
Yeah, I guess it, like, for example, we had a debate that are stable coins considered real world, tokenized real world assets, because the dollar is a real world asset and stable coins are tokenized dollars, so they should be. But when we talk about RWA, like in the strict definition of the term, I think you're right. And I think airline miles and points and rewards, I think that could also be in the real world asset, the sort of the broader bucket. But when we say tokenized RWA, like, it's more, you know, taking traditional.
You want to tokenize your car? I get it.
Not even cars, stocks, bonds, real estate, and private equity, like things that are like financial instruments from the real world.
One thing at a time, dude. One thing at a time. Well, you know, slowly, it'll all happen. Yeah. In like dominoes. Very slowly at first, and then all at once.
And then all at once.
Yeah. Look, first, just on the previous point, I would say that on this occasion, Vitalik doesn't know what he's talking about. So just to say it very bluntly, and
I've never heard that before.
And it's reasonable because he never worked in finance, so not understanding how the finance world, but then making very strong judgments about it. I would say that on this occasion, he's a bit wrong. And just to say, it's like whole finance world in terms of the business model can be like counted on like the hands or on the fingers of your one hand. So it's either a transaction fee, it's either a management fee, it's either a performance fee, it's either a SaaS-like model, or you have an upfront fee. This is your whole finance world, how it actually works in terms of the fees that are generated. This is it actually. And then you can say either it's an insurance business, it's a hedge fund, it's an asset manager, it's a custodian, bank, whatever you put it there, but this is the whole business model. Now, I disagree with what he said, that he's just going in circle. And let me give you an example where I personally think the financial modeling could actually add a lot of value, but I don't think it would be just pouring, you know, water from one cup to another. And it's actually in the case of Robert's business model and protocol. So when you have points as air miles, you know, airline miles, what people don't know that the airline companies have to put capital on the balance sheet against those points because they're actually liabilities for the airline, right? So this is actually, and if you actually go and take a look at all of these airlines, you see that they have a lot of capital on their balance sheet because of the enormous amount of points that have given out. But as Robert said, because they're not tradable, they're not exchangeable, most of the times these points just die out, which again is, in the end, good for the airlines, but not so good because they actually had to hold capital against it. Now, if Robert would create a protocol, and I wish he does, and that we do that you can freely exchange these points between different categories or airlines, and where you can actually reduce the pressure and burden on the balance sheet of those companies so that they can free up capital and invest it somewhere else where it provides a good return. If me as a user of that protocol would get a part of that profits, would that be considered as a bad use case? Well, according to Vitalik, yes, because it's going in circles, right? Because we're just freeing up something to get capital out, to invest it somewhere else, and do something with it. He would say, yeah, this is a bad use of a protocol or a bad use of blockchain or smart contract. But for me personally, I thought it would be an excellent use case. So I have to say, on this occasion, when Vitalik said it, I think it's just completely wrong.
Yeah. Well, first of all, Vitalik is never wrong. So let's put that on the shelf. But
maybe if you are
perhaps.
But even when he triple masked himself on the plane in 2024, he's not wrong.
Even when he talks about pedophilia and stuff like that, we're gonna kind of like say he's okay there. Listen, what perhaps Vitalik is being a bit, exaggerating in order to prove his point or to push people in the right direction here. In this case, I would say he's not being pessimistic about the industry. He's just trying to say, hey, people, he's trying to stimulate conversations like the one we're having right here, giving due to a bit of, fodder for okay, how do we push this in the right direction, people? Let's make this dream that we have a reality, because a lot of what there is out there today is just bullshit and it's not really going the right way. He's trying to maybe make a course correction over here, I would say. And by the way, if you are a human and you're watching, please leave a comment, because so far we only have 2 humans who commented. A bunch of bots. Good job, bots. You guys are winning. But 2 human watchers and 4 panelists.
Is this a bot or is this the bot or a human, Mati?
That's a bot, dude.
Is this a bot or a human?
That's wow. Seriously, that's a bot.
Is this a bot or a human?
That's a human. That was human because he was joining the conversation and he said it in the place where we were talking about that.
Mati, I have a question for you. If you're talking about is Ethereum's staking, is this a bullshit product or is this a real product? Because you take this imaginary created coins, you have to stake them to secure the network, and then you get the yield. Is this a bullshit product or not?
I think it's a bit less. I think it's a bit less bullshit than most of the.
No. Is it a bullshit or not? This is a very simple question, Matt.
Does it make you money?
Is it bullshit or not?
Well, but does it? Does it?
Are you talking about proof of stake?
I think you're saying it's a bullshit product that makes a little bit of money, given that the yields are so low. But that's my point, right? I think this is a bullshit product. I read what Vitalik said. It's a bullshit product because you have to stake these imaginary tokens somewhere. You don't actually do anything with them, by the way, right? But you have to stake them because then you somehow secure the network, and then you get 2-3% yield. I don't know how low it is now. So isn't it a bullshit product? It's a bullshit product.
I've never staked Ethereum, to be perfectly honest, and I wasn't planning on it. Good morning, me protocol.
Or human.
That is a good intern. So good job, Robert.
Great job, intern.
You've got some good people working with you.
But I want to get to what you guys are building.
And I'll get back to work.
I want to get into what you guys are building in the real world space. But before that, Anton, if you think staking, proof of stake is bullshit, then what do you think about restaking?
That's bullshit squared, not 2 times bullshit, but bullshit squared, you know. So, but I don't know. Like, I have never, done it so far. So I did stake Ethereum, and also some other coins as well. Could think it's complete bullshit, but restaking, I actually thought that restaking would actually create quite a lot of systemic risks within the crypto ecosystem because you're just piling up leverage, right? But so far, there's so little liquidity in all of this restaking specific apps, so that nothing has happened so far.
Yeah. Now the new meta right now, there's a big push in restaking of Bitcoin. So like using Bitcoin, staking Bitcoin somehow, like native on the layer 1, and then using that staked Bitcoin to secure other proof of stake network. So like one company, Babylon, just they just launched a mainnet. They launched the mainnet last week, and I don't know if you guys remember, there was like a 1 minute where the Bitcoin fees went sky high. There was like for an hour last week, Bitcoin fees were in the sky because Babylon just launched and everyone was trying to get into the, get early in for the points, whatever. Maybe they'll give me a shit coin. Please give me a rain of airdrop my way. But that's kind of the meta now. But on the ETH side, the restaking has kind of grown to allow for not just ETH staking, but also ERC20 staking. So you're not only creating a pyramid of leverage on ETH, you're creating it on riskier small tokens, which is never ends well for anyone. Yes. So I want to kind of move to more happier things and talk about what you guys are building a little bit, like what you are like on the practical level to bring real world into the blockchain and to make that marriage that Vitalik would love to see so much. What are you doing to make Vitalik proud? Is basically what I want to know.
Avi, who would you like to go first? Yeah, I can maybe expand.
Go ahead. I've been waiting to hear about Me Protocol.
Okay,
if the shoe fits, then you should wear it.
Well, let me segue from that last comment because I don't think it was all doom and gloom on staking. I think that type of innovation, staking on top of staking, may be very risky and building pyramids and stuff, but it also exemplifies the ingenuity and the forward thinking and the experimentation in the sector that really drove me into blockchain and Web3 and etc. And that fuels me, this business model innovation, people doing it. It might not work, it might be really risky or whatever and collapse, but at least people are doing it and people are participating in it. So I love being in this space, and I've been in deep tech and AI and stuff in the past, and this is just really continues to be the most exciting sector for me. Transitioning to the Me Protocol. Me Protocol, as I think I alluded to before, it connects reward systems. So if you've stayed at a hotel in Vienna, you can book a tour in Thailand with the rewards you have. So this is what it does. It connects different reward systems, not just in travel, but also fashion brands, accessories, shoes, everything. And our vision is to connect the reward system so you can reward for anything. So if you're gaming in Web3 and you have a reward token from that game, you can use this on a real world asset. You can buy a coffee with it, etc. So providing instant liquidity across any reward asset. That's what we do. And so built the protocol, anyone can connect to it. We have a marketplace where you can see all the rewards, you can all the offers you can use your rewards from across the sector. Or backed by Farfetch, the largest luxury marketplace in the world, Bank of Georgia, other big players. So integrating travel, finance, and fashion all in the same space. That's just like in a nutshell what we're doing. As I mentioned before, the vision behind this is to create a rewards economy. So it's not just like your airline miles, they're just sitting in an account. And as Anton mentioned, this causes the company to try to figure out how they manage that from a balance sheet perspective. But these are actually being put to use to generate revenue for that. So that's
and how far along are you guys? I mean,
so the protocol's finished. We're on V2 now, working on V2. So that's all launched. The marketplace is launched.
And from an adoption kind of, I mean, you have how many users? end users, I suppose. And
Yeah,
what's
so
your
there's
go-to market strategy for onboarding brands and companies to participate?
Yeah, so we take a traditional onboarding approach for, let's say, Web2 brands. So we talk to C-level people in the company and try to understand their business case, where they want to attract new customers from other regions. So our rewards are very useful because you can attract customers from brands in Asia and the US and Europe, all attracting to your products and services using rewards. So it's a very cheap way to acquire new customers. And so when we talk about rewards, we just talk about business fundamentals. Do you want to gain exposure for your brand? If so, this is a great way to do that. Are you having trouble with retaining customers? This is a great way to do that. Do you want better brand exposure, etc.? And also, it allows companies to take it's like a customer first approach in their branding of their rewards program. So like airline miles are traditionally not customer focused. it's like, okay, how do we addict you to flying with us? And that's about it. But the customers really have lots of pain with regards to their rewards. So we're allowing companies to rebrand their rewards program and say, listen, customers, we really care about you. And because of that, we're going to give you a lot of value. Now you can go use your rewards on all these cool products from other companies. And so that's our go-to-market. And we have 15 brands launching with us. I mentioned some large partners in different sectors. We have about 2 million users in the onboarding pipeline from existing partners. Yeah, so we're we're crushing it, and it's always
the website. I mean, it just, forgive me saying it, it very like kind of very simple. I mean, I don't see any kind of way to sign up here or
yeah. So if you go into the Meet Protocol site, that's more like the developer site to show you about our protocol and what it does. And then if you can go into the Me Marketplace, which is the marketplace for rewards, you can see some of the first brands that are launching there.
Oh, I was looking for a marketplace. I don't.
Yeah, memarketplace.io.
Why is it not? So when I look up Me Protocol on Google, wouldn't have necessarily found the marketplace.
Sure. So we have different branding for the different products. So the protocol itself is where anyone connect their reward systems. The marketplace itself is a very specific branding for businesses.
So you're not ranking at all on Me Marketplace in Google.
Yeah, we did this. We did the soft launch.
Okay.
And then the big full launch of the marketplace is not going to be in probably till October, when we
I can't wait, man. I think this is really cool. And I can tell that you guys are building something really special here. So I wish you a lot of luck with this. This is definitely something that can be very helpful for a lot of companies and a lot of consumers. Because I can't tell you how many rewards I have that are just never going to be utilized whatsoever.
And
I can
it's
just
very
trade
cool
dust balances or find new products to put those rewards to better use. And I think that it's fundamental to an economy, like having these kind of sub-barter systems out there, where people don't necessarily have to, or people aren't necessarily, or companies aren't necessarily ready to give money back, but they can give kind of like reward, like kind of these rewards or internal money that can be spent back with them, but rather than just with them, spent back with other kind of neighboring or supportive businesses. And this is, the barter system has been around since before money itself. So definitely utilizing that and utilizing crypto technology and blockchain to make a system like that can be quite awesome, I think.
Yeah, thanks.
Like my question on rewards, like obviously love what you're building, but anything to decentralize and this was kind of one of my first examples that I would give my friends who were, in 2017 who were skeptics. Like, imagine you could tokenize different, all these airline miles, the rewards or whatever that you get, and then you can, like, I wouldn't say you spend them on something else, but you could exchange them for USDT and whatever and cash them out. But my question is, like, as a brand, like, if you're giving out rewards, you want the user to the client to spend, to stay in your ecosystem. Like, imagine, Adidas, they, you're getting some points or whatever for buying the new Samba sneakers, and then I go and take those points and I use them to buy Jordans. Like, that defeats the whole point of of giving me points, because if I can you're going to, I assume on your marketplace you're going to have competitor products as well. So, why do brands look at that in the idea of, okay, I'm going to join your program, but then it makes my rewards fluid, and then someone might be able to go and buy stuff from my competitor and, like, join their ecosystem using the free money that I gave them.
Yeah. So first of all, we don't look at it as money. Like, these are assets that can be redeemed for stuff, and so it's not just like a monetary calculation in terms of that. If you look at the monetary calculation of your airline rewards, you might not be so invested into earning them in terms of a book value. But what really matters is not the book value, it's the redemption value. So what can you actually use these for? And if you can't use them for very many things, they sit in accounts. People who don't use the rewards are 3 times more likely to defect or leave, churn from a brand than people that do. They spend about 20% more when they use rewards. So you have a higher order value for people that are actually using their rewards. And they purchase more frequently from you. So purchase frequency is something that businesses obviously have to track. And rewards are a way to reactivate customers and to do that. And if you're not giving rewards that are valuable, that people want to earn and want to use, then they're not going to be earning from you. And that's something that I think businesses understand. And it's very difficult actually to create an attractive rewards program. If you think about it, okay, what offers can I provide? If I'm in a closed system and I can provide an upgrade to your seat, I can give you lounge access, I can take $20 off your flight or something, but I don't have there's not a lot of options there. And so connecting with us gives any business like innumerable options for their customers to use their rewards. And that takes a big burden off of rewards programs. I mean, some rewards teams, if you think about headcount from a business perspective, some teams are like in the hundreds. There's hundreds of people trying to work on a rewards program for like a larger airline. That's a massive headcount because they're trying to do deals like internally with airports and shopping centers to try to allow them to use rewards across businesses. So we take all of that burden away from a company, or most of the burden away, so they can keep their headcount in a reasonable level. And so from like an ROI perspective, we're able to increase ROI by reducing costs and increasing purchase frequency for the brands. And so I think that's fundamental. That's fundamentally a value that we're able to provide that is very difficult to produce outside of this type of system.
Thank you for that. Anyone else? We have a few minutes left. Anyone else want to share cool things they're working on building? Now is the time. The floor is all yours.
Anton, I've got way too many.
Maybe I just saw the question. Actually, I think Matti or Dudu, I think you put it like, what's holding RWAs back? And
I think that was a statement, not a question.
Yeah, point. Yeah. So it's a very, very good point. That it's not easy to sell real world assets. Not easy to enforce them. There are securities, so you have special ways how you can market them and pitch them. Obviously, a lot different than if you're selling a utility token or a meme coin, where there's less restrictions, right? But I always ask myself the questions like, does anybody really want RWAs, and or at least the people to whom they're marketed to, right? And it goes back to our story, what people want, what people expect from the crypto industry, different kind of products, yields, returns. is Vitalik wrong or right? But what I have seen, like for now quite a few years, is that RWAs are actually made for the crypto community, because the way they're like just created, I mean, they're tokens on chain for which you need a wallet, specialized custody solution, specialized systems to manage, and so on. So they're actually a thing for the crypto community. But does the crypto community want a yield of, what now treasuries are 5, but in a couple of months they'll be 4%, 3%. I think we're going back to 0, right? So many times, like, I wonder, like, are we competitive enough with real world assets in the crypto industry when you have your restaking protocol offering you maybe double-digit returns with more risks, of course, right? So I would say what's holding us back in the RWA space is that just people don't want this stuff. They don't want it. And even though we celebrate, $500 million AUM from BlackRock's funds, but I can tell you, if you're an asset manager, a portfolio manager in a BlackRock, and you launch a fund and it only raises 500 million, I think you would get fired at BlackRock, because this is not the scale that BlackRock is working with. They manage trillions. This is an embarrassment, but it's a cute small thing that they're doing in BlackRock, experimenting, and but this is all peanuts. So peanuts in my view. I think Robert's protocol will have more TVL, AUM, how you want to call it, or very, very soon than compared to BIDL.
Yeah, good point. So, yeah, definitely. So check out, those of you who are watching and are humans, check out Quantum Economics' new website, QE.finance. On the top left, you're going to see the Quantum Alpha Club. Special introductory price of only $12 for an entire year. So that's $1 a month. You're getting a Telegram group with access to our global analysts, all of the hot takes and tips and airdrops and stuff like that, as well as a weekly newsletter prepared by myself and my close analysis team. And then Quantum Consulting, for those of you who are building in the Web3 space. We are advising on some of the most exciting projects, so definitely feel free to reach out and join us there. Quantum Expeditions is our Bitcoin mining firm. We have a crowdfund at the moment. We've already raised $1 million from 550 investors. So we've got 188 machines running in West Texas and about to turn on a brand new flare gas site, which is extremely exciting. And last but not least, Cora Finance, where we are building the future of DeFi and AI. Basically, is having AI assist people with DeFi. The app will be coming out within the next month or two, and a pre-sale imminent. Bullish on Cora Finance. So thank you, Joel, for that. Yeah, you can see it at Cora.finance. That's about it. Sums up from my perspective. And I think we've got 3 or 4 humans watching, so just about the same as the number of panelists. I counted about a dozen bots at least. So thanks for the bots who did show up. Not discounting you guys. You guys are awesome. So keep it coming. But definitely want to see more humans next time.
Hell yeah! Next time, I think we're gonna have we are more than 4. Chris is human. Chris is very upset that you are specifying him. But next time, hopefully, we'll have
more humans than panelists.
Hopefully, we'll have the Quora team here next week to talk about AI and DeFi. It's a lovely combination. Thank you to Robert and Anton and Matti, as always, for joining us. Next week is our last show of the season. We've had a long season, and then we take a week break because I'm going to be in Singapore. And, I was thinking like to do a show in Singapore, not to do a show in Singapore. And then I realized like, you're in those places and it's like, okay, let's go there, meeting this, meeting, and like, you don't want to kind of limit. You don't want to limit yourself. Oh, I have to go back to my hotel and set up. I want to be free as a bird to go wherever the wind takes me. And maybe someone will throw a pre-sale or an airdrop my way that will change my life. So that's kind of the look and the vibe. So if you're in Singapore, I know Anton, I'll meet you. I'll see you there. Looking forward so much. And I mean, it was an excellent chat. I think we don't understand how early we are. We're still in the first a decade and a half. If you're in the Jewish parlance, the crypto space has just had its bar mitzvah, so it's just a teenager and growing up a little bit, and we are having these fundamental debates of, are we changing the world enough or not? Like, let's relax, let's look and enjoy what we've built and celebrate the innovation and the possibilities that have been created here that didn't exist before. Think the double spend problem has been solved, and proof of work and proof of stake and global collaboration. So I think we have a lot to be proud of, but also a long way forward to reach the final destination. And thank you guys for joining and for building and for all you continue to do. And we will see you on the show next week.
Thanks for having me. Really appreciate talking with you guys.
Thanks a lot.
Thanks.